As a tax strategist, I regularly help my clients choose retirement plans that are ideal for them from a tax perspective. Tax advantage accounts such as 401ks or 403bs and traditional IRAs are all great and they make sense for certain people. But there is another solid option called the backdoor Roth IRA, which can actually be highly beneficial for certain taxpayers. So what I'm going to do today is I'm going to explain everything that you need to know about the backdoor Roth IRA, including what they are, their primary tax benefits, who should have one, and how do you go about converting income you have sitting in an IRA into a Roth the right way. Without further ado, let's dive in. All right, guys, first thing is first is what is a backdoor Roth IRA? It's not actually a specific retirement account. Instead, it's a strategy that involves converting a traditional IRA into a Roth IRA account. Now, let's quickly go over the differences between a traditional IRA and a Roth IRA so you understand the reason why you might want to go through the back door. Traditional IRAs and Roth IRAs are both individual retirement accounts. However, even though traditional IRAs and Roth IRAs are both individual retirement accounts, they are not the same. As a matter of fact, the most significant difference between these retirement accounts is that the traditional IRAs are tax deferred and you can contribute to them with pre-tax dollars. This means that you will not pay taxes on the earnings as the account grows until you withdraw it in retirement. With a Roth IRA, on the other hand, you make contributions with after-tax money, and then your account grows tax-free. Then, when you withdraw that money in retirement, you will not owe any additional taxes on that original money. Now, why are Roth backdoors needed? At this point, you might be wondering, then why would anyone need to convert a traditional IRA to a Roth IRA? Well, let me explain something to you. There are income limits for Roth IRAs, meaning the IRS does not allow people to make above a certain amount of money per year and still make a Roth IRA contribution. For example, in 2023, the income limit for a single filer is $153,000, and for joint filers, it's $228,000. And for 2024, if you're single, it goes up to $161,000, and for married couples, it goes up to $240,000. So if you are a high income earner making hundreds of thousands of dollars per year, then you will not be able to benefit from making direct contributions to a Roth IRA. This is where the backdoor Roth IRA comes into play. You see, the IRS is aware of the fact that many high income earners want to be able to contribute to a Roth IRA, and so it set a limit and left the backdoor Roth IRA option open for high income earners. Backdoor Roth IRAs give higher earners a lot more flexibility when it comes to investing in their IRA. If you're thinking about making a backdoor Roth conversion, I would strongly advise that you speak with a tax professional first to make sure that you're doing this correctly and in the way that is best for your specific situation. With that being said, here are the primary options for making a backdoor Roth conversion. You can make contributions to an existing traditional IRA and then roll the funds over to a Roth IRA. You can roll over existing traditional IRA money into a Roth IRA. You are allowed to roll over as much as you want at one time, even if it's more than the annual contribution limit. You can convert your entire traditional IRA into a Roth IRA. You can roll over your 401k account over into a Roth IRA if your company allows for 401k conversions. So, as you can see, there's multiple options for the backdoor Roth conversion. You can choose the option that makes the most sense for you. For example, if you have a sudden change of heart and you decide that you would rather have a Roth IRA than a traditional IRA, then you can use a backdoor conversion to convert your entire traditional IRA into a Roth IRA. But keep in mind that in most cases, you are going to be required to report this conversion. You will have to file Form 8606 to report the non-deductible contributions to your traditional IRAs and distributions from your traditional SEP and simple IRAs when you're making a backdoor Roth conversion. Who is somebody that should not use the backdoor Roth IRA? You see, as I mentioned earlier, backdoor Roth IRAs are a great option for people with high incomes who cannot make direct contributions to Roth IRAs due to the income limits. So on the other side of the coin, backdoor Roth IRAs are not ideal for people with lower to medium-sized incomes. The reason why I'm saying this is because in this case, because your income is beneath the limit for your filing status, then it is simply going to be easier for you to make a direct contribution to the Roth IRA. In other words, if you're not making multiple hundreds of thousands of dollars and you're not above the income limits for a Roth IRA, then you're better off just using a regular Roth IRA instead of a backdoor Roth IRA. That way you can avoid all of the complications of setting up the Roth IRA, making the conversion, and avoiding any potential mistakes that could happen along the process. Now, another group of people who might not need the backdoor Roth IRA are people who are able to meet their retirement savings goals with their primary retirement plan offered by their employer. So for example, if your company has a great 401k option and offers a contribution matching, if you're happy enough with the option that you already have, continue to contribute to that. You see, everyone's retirement planning needs are different, and the backdoor Roth IRA simply allows high income earners to capitalize on Roth IRAs in a way that the IRS approves of. Now, what about the taxes that are associated on backdoor Roths? One question that my clients frequently ask is, Carlton, when I do a backdoor Roth IRA, are the converted funds subject to taxes? As I mentioned earlier, with regular Roth IRAs, contributions are made with after-tax money and the earnings grow tax-free. But contributions to traditional IRAs and traditional 401ks are often made with pre-tax money, meaning that they have not been taxed yet. These accounts are tax-deferred and taxes are owed upon withdrawal. Now, this is crucial to understand, guys, because backdoor Roth IRAs are not a way to avoid taxes or anything like this. So don't think this way. When you make a backdoor Roth conversion, you will most likely owe taxes on the earnings that have accumulated in your other tax-deferred retirement accounts. So if you are converting funds from a traditional IRA to a Roth IRA using the backdoor Roth conversion, then you will almost certainly owe taxes on the earnings of those funds as you switch them over. So make sure you factor this into your tax planning when you are working with your tax strategist. When can you withdraw money from a backdoor Roth IRA? You see, if you decide to move forward with a backdoor Roth conversion, then once the money is in your Roth IRA, it will be able to grow tax-free. You will be allowed to start making withdrawals from your account as soon as you turn 59 and a half. Once you start withdrawing money, you will not have to pay any additional taxes on the principal or the earnings on this account. So let's say that throughout the life of your Roth IRA, the account had earned millions of dollars. If this is the case, you would still be able to withdraw this money from the account completely tax-free, especially once you reach that withdrawal age of 59 and a half. I mean, just imagine what a blessing it would be in your retirement to have an enormous sum of money sitting inside of your Roth that was growing tax-free that you can use for your lifestyle, vacations, medical expenses without worrying about having to pay additional taxes. Keep in mind that there is a 5-year holding period required before you can make a withdrawal from a Roth IRA penalty-free. So if you happen to set up your Roth IRA in your late 50s, you might need to wait a few extra years before making withdrawals if you would like to avoid that penalty. There are some exceptions to early withdrawal penalties though, and I will cover these for you. Some of those exceptions include making withdrawals that are waived when you're purchasing a home. Making withdrawals are waived when you're using it for college expenses or the birth or adoption expenses. So if you're taking money out of your Roth IRA for one of these reasons, then you should be able to avoid having to pay the 10% penalty. But if you make an early withdrawal from your Roth IRA and you do not qualify for a penalty waiver, then you will be subject to a penalty of 10% of the amount withdrawn from the account. 10% might not sound like a whole lot, but here's the thing. If you're in your 40s or your 50s, and if your IRA has been growing for decades throughout your career, then a 10% penalty could potentially cost you thousands or tens of thousands of dollars, if not more. So for that reason, it is usually best to avoid early withdrawals if possible. Another important question I get asked about backdoor Roth IRA conversions is, can I reverse my decision? Well, right now, the answer to this question is no. Under current tax rules, once you make a backdoor Roth conversion, the Tax Cuts and Jobs Act prohibits you from recharacterizing your converted Roth funds. So unless there's a big change to the tax code, you will have to keep the funds in your Roth IRA once you use a backdoor Roth conversion to put them there until you're ready to withdraw them. We have covered quite a lot of information on backdoor Roth conversions today. Here are the main points that I want to make sure that you remember and the main points I want you to walk away with. Backdoor Roth IRAs are a fantastic option for people who want to contribute to a Roth IRA but are not allowed to do so directly because their incomes are too high. There are multiple ways to make the backdoor Roth conversion. This includes rolling over an entire traditional IRA over to a Roth IRA, or rolling over contributions to a traditional IRA over to a Roth IRA, and more. People with low to moderate incomes that are underneath the income limits for the direct Roth IRA contributions do not need to make backdoor Roth conversions. You will need to pay taxes on the funds you roll over to a Roth IRA using the backdoor conversions if they are from a tax-deferred account. So, what do you think about backdoor Roth IRAs? I want to hear your thoughts in the comments. If you have any questions about them, such as how to set them up or how to keep them maintained, if they're right for you or not, then feel free to get in touch with my tax strategy team by clicking on the link below into today's description. You can also find a link to my new ebook. This ebook is called The Short-Term Rental Rule. This ebook will teach you how to use the power of short-term rental investing to offset your 1099, your W-2 income, and to grow your net worth over time, so feel free to check that book out. Finally, you can also find a link to my Tax Alchemy course in the description, which teaches you how to use the same strategies favored by the wealthiest of Americans to dramatically reduce their tax bill every single year. Listen, that's all I got for you guys today. Thank you so much for joining me. I hope you learned something new about backdoor Roth conversions. Go ahead and hit the subscribe button if you haven't already, and I look forward to seeing you on the next video. Cheers.